The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Probably the final time I'll say it this year. Welcome to Squawk Box. I'm Steve Sedgwick, and these are your headlines. European equities, well, it's better than it could have been. They were called lower. They're hovering around the flat line in a holiday-shortened session for some, with the Stoxx 600 set to deliver a second straight positive year for the first time since 2015. US Treasury accuses Chinese-backed hackers of stealing documents in a major cyber breach, but Beijing rejects the allegations as smear tactics. Talking of China, manufacturing activity slows in December. The President Xi Jinping says the country is on track to hit its 5% growth target this year. And not kidding around, the Chinese toy maker Bloks Group files for a Hong Kong IPO, looking to raise as much as $188 million in the listing. Okay, quick look at European bourses. It's a solid performance, actually. FTSE's flat. In fact, they're all flat, but they were called lower. Given that the legacy was decline in US markets, Dow was down 418, S&P was down 64 points overnight, the Nasdaq was down 235, so it was the dampest of damp squibs overnight as the legacy. But European indices, is anyone in? Is anyone trading? I'm here. Bob's here. Our next guest is here. Anyway. If you're not in the office, I hope you're at home watching us. There you go. Gold is on track for its best year in over a decade, with the precious metal getting a boost from rate cuts and geopolitical tensions. Bullion hit record highs in 2024, with prices up over 26% year to date. Climate-focused funds have raised more than 20% more money in 2024 than the previous year, but it's been a tough, we spoke about this yesterday with the guests, tough year for climate-focused funds. They've fallen short of the record level of 2002, actually. Pippa Stevens has more details on this investment case.
If you look at publicly traded clean energy stocks, you might think investors have lost all interest in the space. But in private markets, the trade is still attracting billions of dollars. Climate-focused funds have raised $47 billion this year. That's up 20% from last year and just below 2022's record level, according to data from Sightline Climate, with much of that driven by infrastructure funds. That said, deployment has slowed. There's now $86 billion in dry powder as investors become more selective on what they're backing. Additionally, while there's capital available at the earliest and latest stages, the so-called missing middle, or the capital required to help companies scale that aren't ready to be public, remains in what Sightline Climate says is leaving a critical funding void in the climate tech innovation ecosystem, particularly for scaling breakthrough technologies. Micah Collier from Weaver told me large public energy companies are one source that could fill the gap, given broad investment portfolios and deep technological know-how. And they're already playing a big role, with corporate VC representing about a third of clean tech funding. So the bottom line is that while the money is still there, chasing unicorns is no more. For CNBC Business News, I'm Pippa Stevens.
Did you spot my last obvious mistake of the year? I've got another hour and a half on air, so I'm hoping it's my last mistake. I said 2002. It was actually 2022, but Pippa corrected me in the package. Right, let's move on. Crude prices are set to end 2024 lower after what has been a volatile year. The market has seen mixed signals, with gains from geopolitical tensions, especially in the Middle East, offset by concerns surrounding Chinese demand. Now, earlier this month, OPEC and its allies once again delayed the unwinding of its output cuts. However, the IEA projects the market could be oversupplied next year, which will hamper plans to increase production. I'm surrounded by great old friends today. Johannes Bernini is chair of the JBC Energy Group. Bob Parker is still with us as our guest host. I've re-inaugurated it for the last show of the year. Johannes, you and I have spent so many absolutely freezing Decembers standing outside the OPEC Secretariat. We've been on the warmer ones in the summer as well, though. And the power of the Saudis plus the Russians and the UAE and everyone else as well, was undoubted for a long time. Did they lose control in 2024?
Well, I don't think so. I mean, they managed to keep the price relatively high. let's bear in mind, the costs are not more than $50 right now, maybe 55 if you want to have a decent return, all set by US shale, of course. But if you're now around $75, the question is really, why is it that high? And I mean, clearly we have OPEC plus, and now they call it Declaration of Cooperation, and nobody knows, to remember that name. But anyway, Declaration of Cooperation group is cutting output and very effectively. And Saudis are keeping the ball low. I mean, they really try to keep everyone under control. Right now it works. And all the tensions, of course, are supporting it, because everyone, every second day hears somewhere anxieties, and so the market is somehow supporting that.
But so that begs the question, Johannes, and I've got many questions, Bob has too. If we didn't have the discipline on the production cuts, and we didn't have these dreadful wars going on in Europe and conflict in the Middle East as well, where would the oil price have been, do you think? I know that's a counterfactual kind of question, but without the tension, without the supply withdrawal, where would we be?
We could easily be $20 lower. I mean, look, there's no reason why prices are where they are unless you're refraining some of the output. Yeah? So clearly they manage it. Yeah? They manage it very effectively. But at the same time, let's be honest, the world economy has not been doing great. Still, we had 1.6 million barrels demand growth this year. And we're also looking ahead into 2025 with about 1.4 million barrels demand growth. So, I mean, really, that doesn't look like if the world is ailing and is not doing well. We talk about it all the time that China is not doing well, but demand is there. Demand is growing. Despite all the move away, the energy transition, oil demand is robust. Yeah. Of course, it could be much higher, no doubt about it. And we see a lot of sign that, the market is moving away from oil. But right now, there is still a little bit of a growth for Declaration of Cooperation left on the table for next year. They are managing to increase a few 100,000 barrels. It's not a lot, but let's face it, a lot of the countries in this Declaration of Cooperation anyway are struggling to maintain their output. And those who are doing well, they're covering it up. So at the end of the day, they have a stable market with much higher prices. They must be very happy. But, we're going into a year where the geopolitical aspect is going to take over much more. And we all know Trump has been a fantastic player in this field, because everyone is already scared before he even is in office.
Well, Johannes, you almost answered my question. A Trump policy on the fossil fuel sector is, I think, clear. What's not clear is to what extent that policy can be implemented. But I'd be interested, what's your view on to what extent can the US expand oil production and gas production, for that matter, further? Because if we see a further quantum increase in US production, that obviously has clear negative implications for prices. But what's your view?
Yeah. Well, we would say that there is a little bit more room on the upside in the US. I would say much more room on the upside in natural gas. But of course, there it is also not giving you such a big profitability. But yes, they can. And of course, everyone else, like this year, we have seen the US were basically pushing their natural gas production, and Europe is forced to take it. Of course, the war against Russia and all the sanctions have helped Europe to take a U-turn on their natural gas supply, and everyone was very happy that the US is helping out here. This is going to become a little bit more difficult, because in the next 2 years, we will see more supply coming in. Next year, a little bit from the US, in 2026, in particular from Qatar. But the key driver in terms of natural gas is going to be much more Asia. Europe is not going to be a driver. It's going to be a beneficiary. But the driver is Asia, because if Asia is again moving away from coal and takes on more gas, the demand growth is going to be significant. Yeah, so the US has a good potential there. But of course, it's a long way to go to Asia and to supply there. So they would prefer Europe to pick up much more of the gas.
Yeah, one interesting investment trade this year obviously has been to be short oil and long gas. The implication from what you're saying is, if you're running that trade, continue to do so.
Yeah, that doesn't look bad. I mean, having said that, the supply growth, needs to be checked by the demand growth in Asia. So that's something you have to watch out. I think that one area where oil eventually is going to look healthy this year is how the play is going to be on Iran. Iran right now is reacting purely on their anxiety of Trump. We can see they allow the IAEA inspectors to go into their Fodorov enrichment plant, which they didn't allow so far. Now they allow it. And clearly this year we have seen Israel taking a very center stage in the Middle East, and they're able to take control on this place. Right now, Trump coming into the office, they feel very emboldened. Yeah? And Iran is very nervous, that someone says, well, we don't want to see Iran with nuclear power in place. So that means right now they surrender before even Trump comes in. And how that is going to play out remains to be seen. We don't know, but, it could, of course, bring oil prices higher.
Go back to the US as well. Of course, Trump wants lower pump prices for gasoline, and he's getting that as well, so that he can quite rightly say, I've done this for the US voter, the US population as well. But does the US oil industry, given the vast amount of money that Chevron and Exxon have spent in the last 24 months as well on buying new domestic production, do they actually want to produce more oil than they're already producing? And because, quite frankly, more oil production equals potentially lower prices, given everything you've said during this conversation, doesn't it, as well? Isn't that going to ruin their margins?
Yeah, that's a concern. The price right now for everyone is as perfect as you can imagine. The politicians are not screaming because prices are just below where it hurts. And everyone else knows it's just, a party price, Having it higher signals that there is a risk factor. Now, I'll tell you where eventually the market is going to be supported. It's eventually going to be supported by further sanctions on Russia. I'm not sure you have seen the latest sanctions that came in. They were aiming on let me read it to you because I can't remember, system for transfer of financial messages. Yeah. That's a system that Russia has set up in order to counter the sanctions from SWIFT. Yeah? So they are not part of the payment system SWIFT, and they made their own SWIFT, if you like. Yeah? The reason why that was now sanctions is because US is taking on the BRICS, and because the BRICS are moving away from the dollar, or they want to move away from the dollar.
Wow.
And this Russian system is basically helping them.
That's a very slow burn story, Johannes, as you know. We've probably been talking about it for a long time. Can I ask you one more question? Natasha Tarek is one of our writers out in the Middle East as well, and I've been looking. She was looking back in September, I think it was, at the break-even price of oil for the Middle Eastern producers, all of these producers as well. There is a consensus at the IMF from back in April, but you can play with the numbers there or thereabouts, that the Saudis need a break-even of $96.20 for 2024, which is about 19% higher as in year. A budget break. They need that price of oil to have a budget break-even as well. How important is it looking at these budget break-evens compared with the oil prices? Break-even $96, oil price $74 as a source of concern for the OPEC producers and dare I say it, the rest of the producers out there?
Of course, it's a concern. That's why they're not releasing their cuts, and they're not taking back the cuts, and they try to do whatever they can in order to keep the supply to some degree limited. And so they need to maintain prices high. It's very difficult to push it higher. We know that that's more psychological thing. Yeah. But for them, it's important. Yeah.
Now, Johannes, I would consider you one of my oldest friends in this business as well, but I don't know if I can carry on with that, because halfway through the interview, eagle-eyed viewers will have noticed we switched the bug on the top left-hand side of the screen from live Vienna to live Kitzbühel. Yes. Can I assume that you are basically just this is an interlude from your skiing holiday?
Well, Steve, you shouldn't be jealous, right? But if you were working in most of the year, right, you could spend time in Kitzbühel right now with the best skiing resort in the world, and with the best snow and the sunshine here. It's just amazing.
Keep rubbing
Steve.
it in, Johannes.
And you know what? Stephen, this afternoon, I will wave to you from Kitzbühel on the ski piste, and I tell you, it's going to be marvelous.
Oh, I will wave back at you from the muddy Ashdown Forest with my black Labrador covered in mud that I'm going to have to wash after. Johannes, fantastic to see you today. I hope we spend a lot more time in 2025 pontificating on commodity markets. Thanks, Johannes. Nice to see you. Johannes Bonini, chairman of JBC Energy Group. You live in a lovely place as well. We live in a nice place. We just got to remember that when he's telling us about the wonderful power to slow in Kitzbühel.
But we're not going skiing this afternoon, are we?
I was feeling quite happy about the show tonight. Anyway, you're going to stay with me for another chat, so that's great, because we still haven't done Trump properly. Okay, we did it a bit on energy, of course. Coming up on the show, a blockbuster year for Bitcoin, but what's next for Bitcoin and cryptos more generally? We'll have more after the break. Chinese toy maker Bloks Group. Is that like the Lego ones? Is it the same similar one? Is that Bloks Group? I don't know. And it was looking to raise as much as $188 million in a Hong Kong IPO. The toy maker will sell just over 24 million shares between 55.65 and 60.35 Hong Kong dollars each. Moving on, it's been a blockbuster year for cryptocurrencies after optimism around Donald Trump's White House comeback sent Bitcoin surging above the key $100,000 mark. I was wondering where Arjun was. Well, he's still off, but he's sent me a package on what you can expect in the crypto space next year.
Bitcoin hit new all-time highs in 2024, and with a blistering rally, many investors are left wondering where the price of the world's largest cryptocurrency is heading next. CNBC spoke to analysts and investors to get their price calls for 2025. Now, let me just go through a selection. Standard Chartered have a $200,000 price target for 2025, which they say will be driven by continued rising institutional buyers. Sid Powell of Maple Finance also has a $200,000 price target for 2025. His reasoning?
I expect to see continued allocations from institutional investors through ETFs. I think the Bitcoin strategic reserve is another narrative that's beneficial, and I also just think that continued portfolio allocation to Bitcoin is going to occur.
So why is there so much bullishness for 2025? Here are the three key reasons. Number one, President-elect Donald Trump.
We're going to do something great with crypto because we don't want China or anybody else, and not just China, but others are embracing it, and we want to be the head. We're going to be ahead of AI.
On the campaign trail, Trump gave out pro-crypto messages. The industry is hoping this will mean a supportive environment for the crypto industry, which should spur prices higher. Crypto leaders have been calling for thoughtful regulation in the US, and the hope is that the Trump administration may provide that. Second, Gary Gensler, chair of the US Securities and Exchange Commission, is stepping down in 2025 and could be replaced by Paul Atkins. The crypto industry saw Gensler as a sort of villain and accused him of regulation by enforcement for the numerous cases the SEC brought against crypto firms. And finally, you'll hear the phrase institutional adoption a lot. Many Bitcoin bulls have said that the involvement of larger and more traditional firms in the Bitcoin market will support its price into 2025. But the bullish calls we've heard aren't without risks. CoinShares told CNBC that while Bitcoin could touch $150,000 in 2025, there is also the chance Bitcoin could fall to $80,000 if the promises around pro-crypto policies from the Trump administration don't pan out. Arjun Karpal, CNBC.
Yeah, nice to see you, Arjun, if you're watching. Quick comment from Bob Parker on crypto as well. It just got suddenly more aggressive on the volatility as soon as Trump was elected. Onwards and upwards, or a more sobering 2025?
I think the only intelligent thing I can say about Bitcoin is one's ability to forecast and the rationale for that forecast for where Bitcoin prices are going to be is virtually impossible. And if you ask me, will Bitcoin be 200,000 or 50,000, let's say by the middle of 2025, it is very difficult to come up with a rational argument.
Bob, I'm going to leave it there because I feel 100% the same. And people say, oh, Bitcoin, there's a Bitcoin guest. I honestly don't know what to ask my Bitcoin guest. I don't know anything about what the fundamental. And when really smart people like you tell me in so many words, I just don't know.
Well, I haven't got a clue.
No. Okay, well, let's leave it at that then. It's two of us. And I know there's some of you want to hear other, but we just don't know. We're not saying it's going down. We're not saying it's going up. We just can't value it by traditional metrics. That's what this job is supposed to do. Bob as an expert, me as a journalist, we're supposed to give you valuation metrics based on history, and we can't. President-elect Donald Trump has endorsed the House Speaker Mike Johnson. That's interesting, to remain in his position. There was questions about that, wasn't there? The House of Representatives is due to vote on the Speaker early next month. Mr. Johnson has faced opposition from within the Republican Party. Yeah, let's be honest about it. There's certain within there who are going to make his life very difficult next year. Anyway, this after he worked with Democrats on a bipartisan funding plan early in December. Bob, we have been incredibly restrained in talking about Mr. Trump, but that is the question. It's going to be the question in WEF. I can almost go to all my guests in WEF and go, Trump? So what's it going to mean?
Look, I think Trump government policies, what they want to do is actually very clear. You know, whether it covers tax reform, whether it covers immigration policy, whether it covers critically
immigration policy, because I thought
what they want to do is clear. Yeah. Now, my point is a simple one, which is, can they actually implement a lot of the things that they have said they want to do? And, immigration policy, you've put it absolutely correct. Implementing the immigration policy is going to be extraordinarily difficult. Now, I think just sort of two themes. I think the first theme is that markets are already starting to discount the probability of tariffs and tension between the US and trade partners. So look at what's happened to the Mexican peso. Look what's happened to the Canadian dollar. The Chinese government are spending a lot of time planning to try and offset the potential impact of tariffs. And that's why probably another fiscal package will come out in February or March from China to boost domestic demand further, and also to focus on regional and non-US trade to try and offset the impact of potential tariffs. Now, one point where I think the Trump government has an issue is, well, I think actually two areas where they have an issue. The first is what's going to happen to the Federal Reserve policy. And I think, we've obviously seen already a major shift in expectations about what the Fed will do. I think that shift will probably continue, and it is entirely possible that the Fed actually doesn't cut interest rates further. And that obviously hinges on how a number of the Trump policies result in higher inflation. And don't forget, inflation has crept up in the States over the last 3 months.
What is Trump plus a Federal Reserve which may cut once, may cut twice, but certainly doesn't look like any more for 25? Trump plus a Federal Reserve which is having to just pull back on those cuts. What does that mean for stock markets?
I think it means that the gains that we have seen in US stock markets over the last 2 years actually are going to, I don't think we're going to have a bear market, but I think the gains are going to be very muted. And I think just one other very fundamental point is that Trump consistently argues for a weaker dollar. But if I am China or the EU and I am facing trade tariffs, one way to offset those trade tariffs is actually to devalue my currencies. And I think we're going to be having discussions next year, not about trade wars, but about actually currency wars.
Right, we've got 1 minute 50 on the entire show, on the entire year of Scorebox. I'll ask you two quick questions as well. Why should the stock market fall if 50% of the gains in 2024 came from 7 stocks?
Well, I think one thing you're going to see next year is going to be some broadening of investor positioning. And one point of concern at the moment is this extreme clustering of investor positioning. Now, I'm not negative on the tech sector. I think the outlook for tech earnings next year, and actually over the next 3 to 4 years, is still very positive indeed. We could easily see the tech sector earnings up by 15% in 2025. Having said that, The PE is close to 30. Investors are very concentrated. That gives you a very clear warning signal.
Final question then. You mentioned about devaluing of currencies potentially as well. I'll just ask you a currency question. Is the euro going to go below parity?
I think it will certainly test parity, and I wouldn't be at all surprised if we have a period trading between 0.95 and parity.
You off to Critsball later?
No, I'm not. No. Unfortunately.
Me neither.
No.
But do you know what? I've actually genuinely had the best hour of Squawk Box of the year. I've thoroughly enjoyed it. I thoroughly enjoyed it. Do you know, you and I remember when you and I were just chatting, Jerome Cavill, all that stuff broke. Sure. That was 2007. Yeah. We love a good old chat, don't we? So, I hope you enjoyed the show, everybody. Bob Parker, thank you very much indeed. Senior Advisor, International Capital Markets Association.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.